What's going on, everybody? Welcome back to the Prolific Ones. Today, I'm going to be going over another banger today, and we're going to be going over exactly how I find my bias whenever I take a look at the indexes, specifically talking about Nasdaq and Dow Jones, US 30 for those who trade Forex, YM for those who trade futures. So, without further ado, let's get right on into it. So, first things first is whenever it comes to taking a look at the bias, what I like to do is understand when it comes to higher time frames, why should price either continue to be bullish or continue to be bearish, right? First of all, you need to find a simple way to look at the market and see in a way that makes sense to you. Why should the market move higher? Why should the market move lower? Right? If the market is too difficult for you to see whether we're going to be moving higher or lower, you want to be waiting and sitting on your hands. Right. So this method, preferably I use it whenever I look at trending markets, right? Strongly bullish or strongly bearish markets. If the market is ranging, this is not a strategy, or this is not an idea that you want to use when you're taking a look at the market. If we're moving sideways, right? Or if the market, from your perspective, you're not too sure where we're likely to trade to. Right. So first thing is first, when it comes to establishing a weekly direction, you want to take a look at the weekly time frame. So what we're going to do is we're going to take away the weekly candle that just passed, and I want to go over exactly why I saw price this week going into this week again continuing to be bullish. So taking a look at the weekly time frame, for those who don't know, I study ICT's concepts. Yes, I found profitability with them. Not everybody's going to find profitability with ICT's concepts. Vice versa when it comes to support resistance and retail concepts. Whatever works for you works for you. Right? Everything in the market works. Is just about making it work for you and using proper money management and continuously working on your psychology. So, right, taking a look at the weekly time frame, we have right here a weekly fair value gap, and I see price, we trade right through this high right here, right? The short-term high in the weekly time frame in respect to the weekly time frame. Price, we trade right on through it. So I consider this to be displacement. And since price has been continuously bullish, right? 1, 2, 3, 4, 5 weeks, we have 5 weeks of price being bullish on a bigger time frame, the weekly time frame. So it would make sense for price to continue to move higher. We're not going to be going into, in depth about interest rates, but also another thing that I take a look at would be the interest rates, right? And also the fundamentals that go into the market. And that also helps me establish an even stronger bias depending on the week that we have a lot of news coming out. So this week right here, we had last week was NFP week. And we see price, we still end off fairly strong and fairly bullish, right? We see this week and the previous week, right? The last week, price, we trade down into this fair value gap, and we are respecting the area, right? And what I want to see price do is, if we were going to create a swing low, right? A swing low lets me know, especially if you are trading in an area that I'm anticipating price not just to trade into, but trade away from, and in the expected direction, right? If this is a bullish fair value gap, I want to see a swing low created and price continue to be bullish. If this was bearish, swing high and price continue to move lower, right? But in this case, since price created a swing low, I wanted to see price continue to move to the upside. Now, if we take a look at Forex Factory, right, this week we had taken a look at the red folders and the orange folders, high impact, medium impact news. That's what I look at. I don't pay attention to the low impact news. The other news I take a look at would be the gray folders, just so I know when we are having a bank holiday, so I can expect slow market conditions on certain days. But that's about it. Right. So going into this week, I understood that we had CPI and we had FOMC rates coming out on Wednesday. And I understood that was going to be a day that we would most likely have a lot of volatility and volume in the market. So if we were going to continue to be bullish, right, taking a look at the previous week's close, what do we have? We have a swing low and price trading into a bullish fair value gap, where if price trades into it, we would want to see price continue to move higher. And since this is a weekly time frame, we want to see price going into the next week continue to move in the to the upside. So this is one of the ways that I use and find my weekly bias. Right. Another one would also be taking a look at the monthly time frame, but that's not what we're going to be going over today. We're going to be going over the weekly bias. So whenever price trades down into an area, right, and when I refer to an area, I'm referring to ICT's concepts. That's how I trade. So whether it be premium, equilibrium if we're selling, or equilibrium discount if we're buying, this is what I like to take a look at if we are going to continue to move in one direction. So it would need to be in a clear trend, right? Not when price is moving sideways. So like up here, we wouldn't be looking to use this, or even down here, we would not be looking to use this. If price is moving sideways, this method is not going to be very useful, and it's not going to be very probable, because if the market is ranging, moving sideways, not taking out buy side, not taking out sell side, but just moving sideways, it's not high probability conditions to be buying or selling, right? Or to even have a clear direction for what the weekly time frame is likely to do next. So that's why if you are moving if price is moving in a range, you want to have discipline, sit on your hands, wait to see if price is going to be moving in one direction, and actually show a willingness to move in that direction and where price is trading from before moving in that one direction. Right. So what I mean by that is, if we're going to be bearish, as we can see on this week, right? This is December 2022. The reason why this week was bearish, aside from price, obviously in hindsight being bearish, we see price run out buy stops, right? Taking out these equal highs, right? And we also have an up close candle, which can also be defined as an order block, right? And we see price trade into it and then move away from it. So that's one of the reasons, or one of the ways you can look at the market being bearish from this. You can also take a look at this swing high and the swing low. That is a range, right? If I draw my fib, let's get this out of the way. If I draw my fib from this swing high to the swing low, what do we have? We have equilibrium and premium, right? This is an area where price is in that premium in respect to this range from this high to this low. And we see price reach above buy side liquidity and then start to create swing high and then move lower, taking out sell side liquidity. Right, so moving forward, so just going back into this week's price action, as we can see in hindsight now, right? Today is Friday, June 14th, 2024. Today was the last day of this week, and we see the market strongly bullish. Now let's go into each individual day and see where you could have found profitability. So if you're looking at the market, let's get that out of the way. We have Monday's price action right here, Tuesday, Wednesday, Thursday, and Friday. So just looking at the market from this perspective, we see Monday, yes, you could have been buying on Monday. However, we see price move sideways going towards the close of New York. And then Tuesday, London, and early in the morning of New York, price starts to sell off. We don't take out these lows and we start to expand higher. So Monday is a day that I usually do not take trades, right? Tuesday is usually the day that I like to start to hunt for the either the higher or the low of the week, depending on if price is in a clear established trend moving higher or moving lower, right? And on my recording, I'm gonna drop the recording, like a clip of it, towards the end of this, or I might drop it in between, me speaking right now. But you're gonna see, or you're gonna hear me say, I want to see, or I'm expecting the low of the week, if we are going to continue to be bullish, to be on Monday or Tuesday. I wanted to see initially if we were going to create the low of the week on Monday or Tuesday. I wanted to see the low that was created on Friday, June 7th. I wanted to see if we could take that low out, but we see price failed to move below the low of Friday, and we continue to move higher. So, even though that condition was not met, uh, the low of the week was still created on Monday or Tuesday. Right. So again, just to break it down one more time, I wanted to see price on this week continue to be bullish because the last week, right, we see right here, price, we create a swing low. So if this was going to be a swing low and looking at how price closed last week, very bullish, I would anticipate, or we would expect price to continue to move higher. Regardless of price moving at all-time highs, there's a lot of traders who are afraid to move, or to trade when price is at all-time highs, which is understandable. There's nothing much you can really target, but in conditions like this, you are able to take advantage of what most traders are looking at in terms of price. When they're like, oh, we're at all-time highs, what goes up must come down. So a lot of traders, they were looking to sell this week. So a lot of these moves definitely tripped up a lot of traders who were looking to take sells, you know, smart money traders, smart money concept traders, ICT traders, support resistance traders. If you were bearish this week, regardless of whatever concept you trade or whatever logic you trade, if you were bearish, you were not likely to be profitable. Right. And as we can see, if we're looking at this from a ICT perspective, right, if we're looking at price, if we were bearish, we would look at this as what, a lot of traders using that 2022 mentorship. I'm not saying it's a bad one. However, a lot of them misuse it. They look at the run on buy side liquidity, and what do they look at on the lower time frames? They look for that market structure shift and that fair value gap. So right here, what do they look at? Market structure shift. On a lower time frame, we have the most recent swing low that price trades through. So what are they looking at? This area as an area to go short. Because why? We have all-time highs right here. Price ran buy stops, created what looks to be displacement, left a fair value gap. So what do a lot of ICT traders, smart money traders do? They pull out their short position tool and they look to go short when price trades up into this area. But as we can see, price consolidates and then starts to take off and go in the opposite direction. Right, so you could have been profitable for some time depending on where you got in. But again, the correct move was for price to be bullish. Right now, taking a look at if you're correct on your bias, what do you have looking to the left? You have your order block right here. Price on Tuesday, we trade into it at that 9 o'clock open, that 9:30 open. And what does it do? It reverses right off of it. Right, again, I want to tell you guys, news is always the excuse to move price in one direction. And what do we have right here? Right, this is Tuesday. We have the open of the next session right here. So Tuesday, we have price bullish. Going into Wednesday's price action, what we have in the morning, we have CPI, right, at 8:30. That explains this explosive move to the upside. We have more news coming in the afternoon on Wednesday, right? We have FOMC. Now, on FOMC, right, on this specific day, I did not take any other trades except for on Tuesday. Not even on Tuesday. I only took a one trade this entire week because of things that's been going on outside of the market, and it was causing a lot of cloudiness in my psychology. So I decided to stay disciplined and not take any other trades because I was not feeling well. All right. So yes, I was able to call the market, but I was not able to participate because of personal things that were going on in my life. Now, however, I'm going to show that was my Discord. I'm going to show you guys a Telegram message, and this was on Wednesday, of why we should, on FOMC's release, be bullish. Where are we at? All right, so Mr. Don't Miss, that's my guy Kamani. He's definitely another amazing and profitable trader. He asked us, 12:24 p.m., what do we expect the market to do at or after 2 p.m.? I said, fake sell and then buy on NQ, which is Nasdaq. Won't be trading this week, going through some personal stuff, as I mentioned before. So going into FOMC on Wednesday, what do we see price do? So here is the beginning, right? 2 o'clock. And then we have the other, actually be a little bit better using the, so here's the start and the end, right? So this is 2 o'clock news, the first one that comes out, and the 2:30 comes out. Price, if we're looking at the lower time frames, which a lot of traders who trade ICT do, they're looking at price making new all-time highs, right? What do we do? If we're trading the 2022 mentorship, what are we doing? We're looking for run on buy stops and looking for that displacement. Right, so they got that. They see that right here. And what do they look to enter at their fair value gap right here? And then they take the entries to go short inside of this fair value gap. Right, and they will look to take profit as price moves lower, taking out this low right here. But again, if we were looking at this from the correct perspective, which was for price to be bullish, we would look at this and block it out because this is all just noise, right? Price is just manipulating those who are looking at the market as oversold, trading at all-time highs, those who are looking at the market as being bearish because we have this so-called displacement after price takes out these equal highs. If we're looking at the time frame just above the 5 minute, we would see we have a bullish area. That price is, if we are going to be bullish, we would respect this and continue to move higher. Right. And what does price do? We trade down into it. We start to respect it. Right. 2 o'clock, we trade down. 2:30, we trade down into it. Going later on in the afternoon session, price consolidates for a little bit and then it starts to explode higher. Now take a look at that open, right? Look at that gap. If we're looking at this from a futures perspective, price opened up about 986 ticks. Right. If you're looking at this from a Forex perspective, price opened up with a gap of 246 points. It's a really big gap. Now, if you were holding this for the buy, you'd be up great money. Even if you bought during the FOMC release. But if you had bought early on in the week and you held, you'd be up. Right? If you bought on Tuesday, that's about 1,000, almost 1,000 points. And that's about almost 4,000 ticks or 3,900 ticks, give or take, which is amazing. Just amazing, right? If you had the correct perspective going into the market, trading at Nasdaq, trading NQ, you would have had caught a really great move to the upside. That's why it's important to have an understanding of what, not just the daily, the 4 hour, but also the weekly time frame, right? Because if you're looking to trade Monday, Tuesday, Wednesday, Thursday, Friday, you need to have an understanding in a direction of why price is likely to trade in one direction compared over the other one, right? Why should price be bullish? Why should price be bearish? It has to come from whatever logic that you use to trade. And guess what? If you are wrong, go back and see why were you expecting price to do this when it was actually looking to do that? Right? And going forward, minimize your expectations whenever it comes to taking trades. Or if you have a bias, look to see, does the market and price action continue to support your bias? Right? If you are bearish, ask yourself, did you see anything that was really supporting price being bearish? Monday, Tuesday, Wednesday, Thursday, Friday? Was anything showing that it wanted to really be bearish from those days? Any real bearish confirmations that the market really wanted to sell off, aside from it being at all-time highs? No, right? Obviously, in hindsight, we can say that, but going forward, minimize your expectations. Okay? Minimize your expectations. But with that being said, guys, that is the end of this video. It's a very short one. I want to go over very briefly how I find my weekly bias trading Nasdaq, trading Dow Jones. Also, let's take a look at Dow Jones. Right, the low of the week was created on Tuesday. Even though price hasn't been as strong as Nasdaq or S&P, price still respected the lows and left the low of the week on Tuesday and continued to move higher. That I would like to see if price can start to accumulate and then continue to move higher. But that's just one idea. If we are going to be bullish, right? This is another one that I have. If price doesn't have, because price doesn't have to trade all the way down into that range, we can just have a small poke down into this area. Right, just below the low that was created from last week's Friday. Right, we had NFP last Friday. If we are going to be bullish, we could take out the low and then Monday, Tuesday, low of the week. But right now, because price is trading at all-time highs, I'm not sure if we're going to continue to move higher. I know for a fact there's a lot of traders who are looking at this and are like, we're at all-time highs. You know, they want to see price sell off. You know, their indicators are saying oversold. You know, a lot of the ICT traders who don't really know how to trade, they're like, all right, we took buy side liquidity. We're going to sell off. I mean, I'm not saying we can't sell off, but the probability, the likelihood of us doing that on Nasdaq from current price action that we can see right now, it's not really looking too probable. Again, I'm not saying that it can't sell off. I'm just saying that it's not really probable from right now, for what price is showing me right now. So this week I still am in favor of price being bullish, right, on the indexes, because for those who don't know, stock indexes are always going to be long-term bullish. Again, guys, that being said, that is it for today. I hope I was able to help you guys find some breakthroughs in your trading journey, because this is a very difficult, if not the most difficult journey that you will ever put onto yourself. And I just want to help as many people as possible get to that point of profitability, because I know everybody who trades does not want to continue to lose money or just continue to just give their money to their broker. I know you guys want to see some return on your investment. Again, take some value from this, go back into your charts and study, and have a blessed day. Right. So with that being said, guys, if you haven't done so already, you know, give this video a thumbs up. You know, definitely like, share, subscribe if you like the content that I'm putting out, because I will, and I'm continuing to be consistently dropping more and more videos, just reaching out to everybody, making sure that we are, you know, giving our own experiences in the markets, because, you know, the perspectives that we all have are very unique. But again, you know, not everybody will win. So with that being said, guys, see you guys in the next one.